Hey everybody, this is Jose. We are about to start in 20 seconds. Let's use this time for a sound check. Please go ahead, confirm that you hear my voice. That way I know we are ready to start. Thank you so much. Thank you so much, Pansy. Very nice. Ruben, how are you? Very nice. Okay, we just got to the top of the hour, so I'm just gonna maximize the introduction slide as we always do. Have the session properly introduced so we can begin. So 1 second here as well. Here we go. How are you, everyone? Good to see you. Welcome to the session 28th of January 2020. My name is Jose Blasco. I will be your guide. Today we're getting together to explore the market from a longer term perspective. We'll be using options for that. Options give you options. Therefore, we'll be looking at options from a directional point of view. We'll be looking at opportunities to make money when the markets rise as well as when the markets fall. But also, we'll be looking at options from a point of view of non-directional trades, looking for scenarios or setups where we can set options, collect premium, and let time pass until those options expire. Keeping the market under control within some sort of a horizontal market or a range. Okay, so we'll be looking at all of that as we do in our longer term sessions. Okay, very nice. Good to see you all. Charles, Bojan, Edward, Mark, everyone. Super pleasure to have you. Let's begin. We have a disclaimer. I'll do the disclaimer and that's it. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. And that's the introduction. So session is officially started now, and here is our beautiful trading platform with the even more beautiful UFOs on the screen, isn't it? Anyway, so notice that today, as I start the day, obviously, I don't look at the VIX every single day, but I'm pretty sure that most of you, probably all of you, are aware of what has been happening to the market in recent times. I'm talking about the last, let's say, the last two trading days. And basically, if I look at the S&P, in case you have not seen it, so what's happening is that the S&P, you can see a pretty dramatic move down here, given how quiet and nice and smooth the move up was. We are just experiencing now a very powerful move to the downside. And everybody, even though the market now is kind of bouncing in the overnight session, in the pre-market opening, we got 0.54% up. But in any case, most people around the world got greatly scared, probably because of the fundamental reasons behind the scenes, very likely related to the fear kicking in the markets out of what has happened other times in the past when very problematic viruses have met humankind and created all sorts of conflicts and therefore slowing down businesses. And long story short, what I'm saying is that a few days ago, we were looking at the VIX around the 12 point mark, and now we are more looking at the 16 point mark, which is greater level of premium for options. Okay, so because we have a greater level of premium for options, when you look at the non-directional trades, we have 3 instead of 2. Okay, the other day we got 2, if I'm not mistaken, in the session that we did. So today we have 1 more. It's not like it's a lot. And the reason why it's not a lot is because the market is pushing very strong in one direction. And therefore, the scanner that is looking for non-directional opportunities, the one that are pure non-directional, obviously the scanner is having trouble to find opportunities that met the non-directional rules. We do have now more premium, but the markets are moving too much. And now it's difficult to find non-directional trades which are purely non-directional. But look what's going on now if we load the list of neutral shorts. Okay, the list of neutral short now is providing with a collection of opportunities that we're going to be analyzing and see if any of those could be executed. Okay, because what we know about those is that given the VIX trading at 16, we should have more premium available, and that should be nice. Okay, neutral long, notice that we got nothing, and again the reason why is because the market is falling hard. Actually, take a look at this. Finally, we got 1 red dot on the climate for the S&P. Okay, we were expecting in this current market environment, you would have expected 10 candles going up, which is a bunch of candles, isn't it? But I don't remember exactly the number, but this is probably like 20 or maybe even more. So this market was really, really, really overextended. And that's why I said finally we got some red kicking in. And by the way, this is not likely going to last too much. It's going to be 4 or 5 days. And then, you would fall again into a territory where the market should go back up, especially if you look at how many green UFOs are below price. Okay, so probably smart traders out there are realizing that too, and that's why the market is already kind of bouncing today, and there is a little less fear kicking in. But in any case, putting on the side what may be the reason for the things that happen to happen, we will just apply our rules because this is how objectively we're gonna get into trades. Okay. Also, directional short opportunities, we got an opportunity with target to be analyzed, and directional long opportunities, we have opportunities with BBBY and CAG that we will also be analyzing. Okay, but again, what is happening in most of the scanners? Few symbols. Okay, few symbols, and there is a reason for that. For the ones that are directional, the market is moving a lot, and if you want to go long, again, the S&P being in a down climate, most markets will be in a down climate. Also, if the market is in a down climate, it means it's falling. If it's falling, everybody gets scared, so the price of the options go up. Therefore, opportunities to go, to go short and make money on the way down will not be so much because the scanner is looking for debit opportunities, meaning options that are cheap. But the VIX went up, so options are not cheap any longer. So that's why also we have few symbols here. And then because the market is moving a lot, in non-directional, we got only few. And basically, probably our bread and butter today in such market condition will be to work with neutral short, which is the longer list, and it's probably where we'll find an easier time to find setups. Okay. In any case, the opportunities provided for directional and non-directional, even though the list is short, do not discard them. Actually, those are more unique opportunities, if you wish, because if everything, for example, in the scanner for longs, right? So if the world is ending, okay, let's be a little dramatic here. So if the world is ending and the market is collapsing in a way where the climate is now changing to the downside, but those two stocks are not, it may mean a lot about the relative strength that those stocks got built in. And therefore, if the market then goes back up, those stocks are likely going to go back up even faster to the upside because they show relative strength. So again, long or short list, everything got pros and cons in life. When you see a short list, sometimes it's a little, how do I put it, a little disappointing, right? Because when we sit in front of the computer ready to trade, we want to do that trade as much as possible. At least that's me or my mindset as a trader. And when we have short list, then basically you're gonna trade less. Okay, but at the same time, the good news is that there may be more unique opportunities, and because there may be more unique opportunities, then it may produce even better results. Okay, so pros and cons, and long explanation to start the day with, but I think it's useful for when you do this by yourself, for you to be able to understand what you got in your hands when one day after the other day you refresh the scanners on your own and you get the list on your own, and sometimes you may wonder, why is it a long list, why is it a short list? So hopefully this insight is helping you to understand why. Okay, cool. Okay, so let's go ahead and let's begin with pure non-directional trades. Okay, so I'm going to load here Boeing. Okay, so Boeing crashing down very violently. Okay, very violently. Okay, so probability is 48% when using a regular session. It's right at the limit for non-directional trades, isn't it? For regular trades, directional trades, we would want at least 50%. For non-directional, 48 is the least we go. Okay, but notice now if I switch to pre and post market, clearly most of the most important trading activity is happening pre and post market with Boeing. Okay, nice information that is being revealed here by AutoUFOs. Okay, so now I do need, in order to do a non-directional trade, I need at least 2 UFOs above and below. In this case, I only have one, so which means that I'm going to have to load more data. But before I do that, I also want to look at the earnings, okay, because probably Boeing is overpriced because what's happening to most of the transportation companies with all the transportation ban that is happening worldwide. But it may be also earnings. Okay, oh, you look at that. It's actually earnings. Okay, January 29, which is actually tomorrow, is going to be the earning dates for Boeing. So guess what? We are not going to be able to touch that stock as of now, given the earnings date being tomorrow. Okay, so we'll move into Colgate Palmolive. Okay, 47%, that's not good with pre and post market. So let's check regular session. That's 54%. This is now correct. Okay, now CL got UFOs above and below, but I guess you are with me, when it comes to how far those UFOs are, and therefore I'm gonna have to check what is the earning date for CL, and hopefully it's an earnings date quite far, so it gives us the opportunity to plan trades with longer expiration date to be able to sell options above and below those far away UFOs. The earning dates with Colgate Palmolive is January 23, but the trader in me is making me a little skeptical here in the sense that I don't see the reported results. And I'm thinking that may be a typo. Okay, so I'm gonna call for a little bit of teamwork. Okay, a little bit of teamwork. You guys connected with other platforms such as Thinkorswim or maybe Tastyworks or platforms that provide earning dates easily on the screen. I would like to ask you please to double check what is the earning dates that you got for Colgate Palmolive on your end. I'm going to do a quick confirmation as well by loading TradingView. Okay, if I load CL, okay, you can see the earnings date here happening on the 30th of June. You see that? The E for earnings, okay? You can also see that in TradingView. It's what an amazing platform, isn't it? So earnings date January 31st, okay? And January 31st, I believe that is the end of the week, isn't it? That's Friday, yeah. So we cannot deal with Colgate Palmolive either, because if we were to do this trade with Colgate Palmolive, what would happen is that we'll be selling options that expire the same day of the earnings, and we may get in trouble. Okay, so we are not going to do that. We will pass on that. So the next one available will be GILD. And back to checking the earning dates for GILD, in this case, GILD. Okay, in this case, we are talking about February 3. Okay, February 3. And February 3, if we look at the calendar, that means that we could use February 31st expiration, but notice that February 3 is Monday, meaning that we cannot use February 7. So we can do it using February 31, and therefore the only way for this to work well is that the UFOs were to be close by, given the fact that that stock is only $63 per share. Is not a very expensive stock, if you know what I mean. And in that sense, we know that the value of the options derive from the underlying asset. So the higher the price of the asset, the higher the premium collected. And the reason why I'm concerned about the premium I will collect, and I need UFOs to be close by, it's because we have a rule where we shoot for minimum 35 cents when we sell options. And if the UFOs are far away, or if the UFOs are far away, or the expiration date is too close, then you get paid little. Okay, the further away the UFOs, the less you get paid. The closer the expiration date, the less you get paid. So that's why I was hoping in this case that the UFOs would be close enough. Okay, but when I say hoping, is just by using an English word from the English dictionary. Is not because I am authentically hoping. Actually, I don't care. I'm just going to look at pre and post market. That's 52%. Okay, so I got a collection of UFOs there, above and below. So remember, we need to point at two UFOs. So that would be my upper two UFOs above and two UFOs below. Okay, and then I'm gonna move to my regular session, which is also 50 plus. And by looking at this session, I can also notice how I can also use 1 and 2 UFOs right there. There are also on-field orders. Okay, so depending on the setup, it may be more convenient for me to go for the higher UFO or the bottom UFO. But again, before I think about this too much, remember, many times in the sessions I will say, without even thinking about it, which is another way to say I don't care. Okay, because what we're gonna do is we're gonna turn on stats. Okay, we'll turn on stats and look at what statistics suggest for how far in price this market should move. Okay, anyway, we got our trades here making $296 at the moment. That's nice to see. And we are trading GILD. So loading the option chain. Hey dear, good to see you. Good to see you. I can see that you have a new name today. Okay, so January 31. Okay, so I'm just gonna right click, analyze and sell Iron Condor. This is what I mean when I say without even thinking about it. Okay, so I'm just gonna click on that. So my Iron Condor shows up on the analysis tab. This allows me, with that particular expiration date, to switch my price slices to be -1 standard deviation and +1 standard deviation. And again, what's very important is that you make sure you have the right date here. Okay, because basically that is now telling you that price should be capable, based on stats, to move between 62 to 66. Okay, so if we go back to the chart, 62 is right there, 62.22. So let me be a little more precise. So 62.40. Okay, that's good. So 62.40. So my UFO is 62.22, meaning that statistics suggest price will move to the maximum to this point. We have 3 UFOs to defend ourselves, and therefore price should not, in normal cases, surpass that 62.23 mark. Okay, so we are well protected in the bottom side. In the top side, we have 66.15. So when looking at 66.15, I am a little bit in a trouble here. Okay, a little bit in a trouble here, because 66.15 is above the upper UFO that we have there. Okay, so initially I would say we don't have a trade there just for a few cents. Also, what I would want to point at is the fact that when the market opens, all of these will be recalculated, and it'll certainly be worth it to come back and check if we still got 66 something above 09, or it's going to be 66 something below 09, because then we could certainly set up a trade if that was was to be the case. I do like the setup, okay, in the sense that if I was to measure the distance from the current price to the bottom part, and I was to replicate this to the upside, okay, actually this would be, where where I would end up with. But the fact is that price went up 0.64% in pre-market session. So to be a little more precise, I should move to the pre-market session, and now notice how the price is actually up here. Okay, so if I was to adjust it for the upper side, and now I was to project to the bottom side, so notice how I am almost exactly in the midpoint of the range. So the setup is just nice. Okay, the setup is just nice, very nice. Okay, so we just need to see what statistics will suggest, and also my greatest concern is how much I get paid for the 66 calls. And oh, okay, yeah, so that's no good. Okay, we get paid 14 cents only. Okay, so we're gonna have to wait for the market to open, see if some fear kicks in. Okay, if the market was to open and starts falling, we may get to see more premium in those options, and we may have a trade. So I'll make a note for myself. After the market opens, we may have an opportunity with GILD. So I will come back and check. It's not looking too clear. It's looking more in the negative side than the positive side, but it will be worth it to check. Okay. Let me see, Mark. Climate is unconfirmed. Yeah, I get you. Now, having said that, we don't have any rule for climate for the non-directional trades, Mark. Okay, so it's not necessarily a rule. Actually, I would even say that it would even concerns me if the market is not, if the climate is not confirmed, in the sense that that means the market got very quiet, or is about to change direction, or about to push in that direction in a way that is confirmed, and therefore that's the opposite you want to see when you do non-directional trades. So really the climate is not part of the equation when doing the non-directional trades. We have other rules built in the scanner with a DMI and everything that we covered in the sharpening sessions. Okay, I think you're aware of that, Mark. I'm pretty sure, but I just wanted to phrase it just in case. Okay. How are you, Yuri? Good to see you. Ruben, could you combine red and green UFOs from both regular session and pre and post market if both gives you more than 50%? Yes. Yes. Absolutely yes. As long as we got more than 48% in this case for for the non-directional trades. Okay. Cool. Okay. So now let's move into the world of directional. Okay. So we're going to start with, you know what? Let's begin with non-directional. Let's start with TGT, target. Okay. Since the market is falling, we'll start with non-directional. Okay. And what do we have? So this is the time when we look at the climate. So the last candle on the chart is number 7. Today, when the market opens, it's going to be number 8. Okay. And statistics suggest that in the case of confirmed down markets, what we should expect is 6 candles every time we got a down market. Okay, so down market 6 candles, down market six candles. Okay, that's what statistics would suggest before we have a change of climate. Okay, and in this case we already got 8 candles. Okay, so what does that mean? That means that this market is already somehow stretched, not looking good. Also probability, I mean, we can still take the trade with half of the size, isn't it, based on the special rules we have. But anyway, I'm looking at stats and we got 46%. That's not convincing. Pre and post market is 46%. So yeah, so certainly target, that's the beauty of AutoUFOs. We are kind of getting a little bit of understanding, a little bit of insider information here, if you wish, in the sense that we can see that there is not much institutional participation on target. There is a lot of lack of interest. Institutions, large market players, fund managers, they place their orders, and if they don't get filled, they cancel them. Okay, so the quantity of unfilled orders in the market is much less, and therefore the probability is also lesser. Okay. Yeah, the climate is unconfirmed, GWAC, when you have a thin dot. When the dots are thin, then the climate is unconfirmed. Okay. When the dots are thick, then the climate is confirmed. Okay. So thick is confirmed, thin, unconfirmed. Okay. So anyway, so let's look at the opportunities to the upside. We'll start with CAG. Let's see what we got there. Conagra Brands. Okay. So, well, as we speak, we have a non-confirmed climate. Okay. But our scanner is smart. Okay. Is already looking at what's going to happen when the market opens today. And it seems that based on yesterday's trading action, which is the last action that we have on the chart, the app is now classifying the climate as confirmed to the upside. Okay, so the moment the market opens, we're going to see a blue dot here. It's not showing yet because the market is closed, but 7 minutes from now, okay, 7 minutes from now, we will have a blue dot. Okay, and probabilities are 52%, so that's good. And assuming we're going to have a blue dot when the market begins, it's going to be number 1 out of 5 candles. Okay. Statistics suggest up markets in the case of CAG will last for 5 candles. In other words, we may be catching a new climate about to propagate from the very beginning. Okay. Now, for that, I do need UFOs, and even though I do have a good probability here, the problem I have is that when I look at stats, which is 32.5, I don't have any UFO, green color UFO at 32.5. I have none. So that is not good, but I haven't checked pre and post market yet. So let's do it. I just did. Okay. And here, unfortunately, with pre and post market, you can see that this is not the time frame where we find the institutional interest. And therefore, we don't have a valid setup. Okay. Later, maybe during the day, okay, in the regular session time frame, something for you to watch. Okay. Later in the day, maybe 2 hours from now, we do have a UFO that just formed there, green color, and then you will be able to have a trade given the fact that this UFO would be basically lining up with the value of the average, okay, and then you will have a valid trade in front of you. But at this moment in time, as we speak, there is no green UFO, therefore there is no trade with CAG. So we're gonna move and check BBY, okay. Still asleep, Mark? Yes, I understand. It's very early where you are. Good. Okay, so loading BBY, Bed Bath and Beyond. So what do we have? We have 4 candles in client mesh. That should be 7. Again, today when the market opens, is going to be candle number 5, but still 5 out of 7. It's a good time for us to enter. Okay, so from that point of view, it's a happy one. From a probability standpoint, and also I'm not too surprised given the low price of the stock. Okay, there is not much institutional interest there. Okay, 46%. Not good. If I switch to pre and post market, we have 47%, so a bit more interest from the large market players to keep their orders in if they place those orders during the pre-market session or the post-market session. But still, we are not hitting 50%, which is basically telling us that that stock is basically moving as a reflection of residual buying or selling that market players may have as a reaction of what the overall markets are doing, more than really having a huge amount of institutional interest. At least we don't see that at the moment in time, given the data loaded on the chart and the stats returned by the app. Okay, so not good. Okay, not good. And therefore, I'm just gonna wait. I will wait 4 minutes or maybe 3 minutes and a half, something like that, for when the market opens. Okay, and the moment the market opens, what I will do, just to get updated results, I will reload my 3 scans for the 3 type of market conditions that we just explored, which is directional long, directional short, and pure non-directional. I will reload it because it seems that the markets are moving quite intensively right at the open, and we may have different changes of scenarios. We may have a few more symbols in our list, and I would like to see if that's possible in order for us to look for trade setups that could be more profitable and more diverse. Because basically, if I don't find more setup in those 3 on the top, basically I am left, okay, with neutral short, because you probably remember that my list for neutral long was empty. Okay, none of the stocks are meeting the criteria, again, given the strong drop in the market in the past few days. Okay, so I would be left with neutral short opportunities. Okay, which certainly are going to be nice, and we're going to explore them all. But in order to create more diversity, I will relaunch those scans in a minute. You will see me do that. Okay. But anyway, in the meantime, let's begin with neutral short. Okay. I just need a little confirmation from you guys. How is it going on your end? Up to this point, I've been moving quickly and efficiently through the symbols, even though I've been sharing a lot of information while I was moving from chart to chart and kind of sharing with you what's going on in the back of my mind, and hopefully good insights for you. So I've been talking nonstop, if you wish. At the same time, we don't have any trade ready to be executed yet. So I'm wondering, how is it going on your end? Everybody okay? Everybody with me? Am I going too fast, too slow? Little feedback would be welcome, even if it's all good. Like some of you are reporting, it's always important for me to know it's good, just like it's important to know if it's not good as well. Okay, so I can be connected with you. We can be in sync. Okay, good. So it seems that all is good. So therefore, I'm gonna start with the list. Okay, and again, when looking at the list of stocks, one thing that you may want to do is to start looking at those markets. Normally, I look at the stocks which are $100 or more at the beginning, because again, we are about to sell options. Every time I'm dealing with selling options, I want to collect the greatest amount of premium as possible, and therefore looking at stocks of a higher price point helps for that goal. We all know, we covered that in sharpening sessions, that the prices of the options are complex and they don't exclusively depend on the price of the stock. They depend on many more things, and sometimes cheap stocks will have very, very high price options. But as a rule of thumb, of course, putting on the side all the other factors that impact the price of an option, the price of the underlying definitely for sure will impact the price of an option. So the higher the price, the more premium to be collected. Okay, so that's why I will start with a higher price point. Okay, so what I just did is double click on the header and I just got my list sorted from higher price to lesser price. Okay, good. Dirk, all good. Still trying to figure out why my name changed here. Well, I don't know. I don't know. That's certainly something weird. That's certainly something weird. Okay, so the market just opened. Okay, the market just opened. So I'm going to relaunch those three scans. Okay, that's it. And I'm going to position myself there in neutral short while the scans are being run. Okay, so I want to start with BIIB, which is Biogen, because Boeing, we already checked that earnings is tomorrow, isn't it? So that one is not going to work. And therefore, I'm going to start looking at Biogen. Now, again, let's begin as well with looking at the earnings. Okay, so we don't waste time on the chart if it's not needed. Earnings are on the 30, okay, for Biogen. So certainly it's not going to work since next Friday is the 31st. Okay, so that's not going to work. Therefore, I'm going to move into Disney. Okay, and while the chart is loading for Disney, we will also look at earnings for Disney, which earnings for Disney happen on February 3. Okay, February 3, February 4, doesn't matter really. We're going to be able to use January 31st, okay, which is next Friday, but that's it. Okay, that's the most we can use. Okay, and I would say that we have a pretty interesting setup with Disney because there is a very strong fall on Disney right here at 136. We have two UFOs above, we have two UFOs below. They are not too far out. Okay, so you know the 142.5. Okay, I'm just curious to see how much we get paid for Disney options using 31st of January for the 142.5. Okay. We only get paid 14 cents, 8 cents. We don't get paid enough. Okay, so I was thinking that maybe, okay, given the strong drop, options would be overpriced enough, so we got premium enough at 142.5. But statistics suggest that there's no way Disney is going to rally to 142.5 from now until Friday, and therefore those options are so cheap. That's why I use the term "no way," meaning very low probability. Okay, so. Looking good, but earnings being on February 4, we cannot do this trade. We would just need a little bit more time from now until earnings. Okay, Caterpillar, CAT. So let's take a look at CAT to see what we have. And CAT is providing January 31st. Okay, so it's not going to work. IBB, that's an ETF. Okay, you see, it starts with. Let me see if I can show it to you. No, I cannot. But anyway, next to my cursor, you can see iShares Nasdaq Biotech ETF. Okay, so that's an ETF. So we're not going to deal with that. UPS. Okay, UPS Expedia. Normally those stocks got a decent amount of premium. So let's take a look at UPS first. So UPS January 30. Okay, so we cannot do it. Okay, so what about Expedia? Expedia February 5. Okay, so that works. Expedia could be a candidate. So let's click on Expedia. And we would, again, one more time, be shooting at January 31st as the expiration date. And yes, it's gonna be tough. Tough because we got one UFO here. The next one is so far above. Okay. So again, if I switch to pre-post market, we may have a surprise. Let's check. So we do have 49, and you know what? We do have a surprise, but it's not going to work either because we have those UFOs here, which are close by. Okay, so if I sell one, wait a minute. Yes, it may work. It may work for a minute. Muscle memory. For a minute, I was thinking non-directional, but in this case, it's not non-directional. It's neutral short. So the only thing I care about is the red UFOs. Okay, and here we do have 49. Okay. And we also have multiple UFOs on top of each other. Okay, so the question is, if I sell 114, how much I get paid for Expedia? Okay, so loading Expedia, January 31st on the top. Okay, and if I do 114, what is the midpoint? well, the midpoint is 28, which is certainly not enough. Okay, it's not enough. And notice how, by the way, above 113 we are losing a lot of liquidity. So 40.50 is acceptable, but now we got 10.45. It's quite crazy. Yeah. We got two UFOs here, 1 and 2. Okay, so let me see. We could maybe sell the 113. Let's say what probabilities suggest. Okay, so I'm just gonna, using the call side, right click and analyze and sell a vertical. And when I do that, okay, here's my vertical using January 31st. It says 114 is the one standard deviation. Okay, so 113 is not enough. I need to go all the way to 114. Okay, all the way to 114. And that would be the one, but as we saw, we are not being paid enough. Okay, so let's go for the next one. XBI is also an ETF. So Valero, we're now looking at Valero. So VLO. Okay, VLO. So Valero, January 30, doesn't work. United Airlines, okay. United Airlines, UAL. So United Airlines got earnings. Got earnings on the 22nd, but I'm just as skeptical as before. You see, there is no reported data. So what am I going to do? I'm going to ask for a little bit of teamwork, as I did before, but also apart from the teamwork, I'm going to go ahead and load UAL. And oh yeah, so in here, United Airlines did report earnings already. That was on the 21st of January. Okay, and that's already reported. So they didn't update. They didn't update the website, but the earnings have been reported, and still that stock, it's crashing like the world is ending. Okay, and it's showing in our website. Definitely, that's probably very, very highly related to the health concerns, the worldwide health concerns with the new virus. Okay, so pre and post market is giving us 46. What about regular session is giving us 55? Okay, so that's good. Okay, that is good. Now we do need at least two UFOs to lean against in this particular trade, and that basically is pushing the strikes for us to sell to be 89, to be 90. Okay, and that is really, 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 really far out. Okay, really, really far out, and I'm not sure we're gonna find a premium. I mean, good news is that we can use up to April expiration date. That's the good news. Okay, we can use up to April expiration date, but of course we don't want that. That's way too far. So let me try 24 days from now to see what we got. If we do the 90s, okay, that's still 14 cents. What if we do 20 of March? We do the 90, that's 54 cents. Okay, 54 cents. So let me see, 90. Yeah, there is no liquidity there, 3 to 72. Okay, so no weekly options. And if I do the monthly March is okay from a liquidity standpoint, 51 and 57. That is tradable. So I'm gonna right click and analyze and sell a vertical, and look at what is plus one standard deviation, okay, which is 88. Okay, 88. So one standard deviation is 88.3, and our beautiful UFO is showing up at 89.71. In other words, selling a vertical spread up here seems certainly reasonable. Okay, so let's plan it. Okay, it seems that we have found a trade. I'm not sure yet, but it is looking like it should be okay. So what we're gonna do here is we are doing a neutral short trade. Okay. Okay, let's be proper. It's not a short trade, it's a short bias trade. And the way we're going to do this trade is by buying a call and selling a call below. The call we're going to sell is the 90 call. Okay, and based on the option chain, the one above 90 is 92.5, if I am not mistaken. When I looked at the option chain a few minutes ago, that's what I saw. So let me double check. So we have the 90 and we have the 92.5. Okay, so we have them. Okay, liquidity is good here, liquidity is good there. So all of this is looking good up to now. Okay, and therefore let's look at analyzing this a little more closely. Notice how if we were to do this trade, we would collect 20 cents of premium per spread, 21 now. But remember, we have rules to comply with, which is first, we need to get paid at least 35 cents for the options that we sell. We saw the one we're going to sell, which is the 90 call, was paying us 50 something. Okay, so that's fine. Okay, that rule is okay. So then the next one is that we want to make sure that the risk of the trade, okay, compared to the credit collected, okay, we want the credit collected to be at least 15% of the difference between strikes, which represent the risk of the trade. So how much is the difference between strikes? Well, it's actually, I don't need a calculator for that, isn't it? It's 2.5, okay? 92.5 minus 90, it's 2.5. So how much is 15% of that? So 15% of 2.5 is 37.5, okay? And the problem I have here is that I only get 20, okay? I only get 20, and therefore, even though we are getting premium enough for the option that we sell, the problem is that when you buy the protection for your spread, then it is not providing us with the overall net premium that is needed to call this trade valid. Okay, therefore the trade is discarded and we cannot execute that one. Okay, and was looking good for a moment, but really, you know, what needs to happen for this trade to work would be something like that, or some, you know, and you know, while statistics are still okay from now until expiration, if this market was to go back up, probably it will create a little bit greater level of balance between those strikes, and you may get the premium you want. Okay, but not at the moment. Okay, so what about the next one in the list, XOM? So looking at earnings for XOM, XOM will be reporting earnings on the 31st. Okay, so we're gonna pass on that. Delta Airlines is the next one on the list. Okay, I'm skipping XLB because it's an ETF. Okay, so I'm pointing directly at Delta Airlines. Okay, and Delta Airlines is having earnings on the 14th of January, but it's not been updated. Okay, so again, let's take a look at TAL. Yeah, earnings already took place. It was on the 14th. Okay, so that already took place. So let's go for it. 52%. That's good. We do have multiple UFOs that are closer. That's good too. If we look at pre and post market, 52 becomes 63, even better. So I mean, the perfect setup would be to rely on that UFO. Okay, at 69. Okay, so the question is, how much I get paid if I sell 69 calls on Delta Airlines? Okay, how much do I get paid? And of course, for example, if I use February 21st, how much I said 69. Okay, so 69. Wow, I got paid absolutely nothing. 20 of March, 69, that's 70. I get paid nothing. Like even if I go all the way to March, which is 50 days. So yeah, premiums, that stock got way calmer. If you compare from yesterday to today, there is no premium there with Delta. Oh, wait a minute. Delta Airlines. Sorry, I was looking at the wrong symbol. Let's do that again. Jose, why buying a call above? Well, because we are building a spread there. Okay, we are building a spread out of safety. Of course, advanced options traders may also go ahead and sell a naked call. This has other risk attached to it. It requires a higher level of approval for the accounts. Nothing wrong with that, absolutely not. But at the same time, you need to know your stuff before doing that. So one way that is simpler, okay, less risky, it's to buy a call against the call you sell. And also, it has another advantage, Derek, which is if you were to see, let's say you have a setup like this where you have three UFOs, and the market comes here, okay, and let's say you sold calls at this level, okay, so you sold calls here and you bought calls above, right? So you know the most you can lose is the distance between them, okay? And now let's say price comes to your UFO, right? And let's say it goes through two UFOs, okay? And then it goes even above your short strike. So if you are this guy, you're in trouble, okay? But if you have this, okay, then I mean it's not a good news, but it's okay. You know what's the most you can lose, which is the distance between strikes. Okay, so what do? You just leave it alone, and what many times happens is that the next UFO will turn it down, and now the option expire, and now you ended up with a profit. Where if you were selling naked calls, then the management it's totally different, and you do get paid more, but also you need to do other things to the trade to not to get in trouble. Okay, so that's why I'm planning on buying a call above the call I sell. Okay. Sorry for that. So we're looking at Delta Airlines, okay? And we got 49.86 with pre and post market. Regular session is providing 53, which is better. So selling the 60.5 would be ideal. So again, let's take a look at how much we get paid for the 60.5. Yeah, 61 pays 34. Okay, so I guess that's acceptable. Yeah, prior expiration dates 60.5 are not acceptable. So 21 of February could be the way to do it. Okay, so let's go ahead and I want to sell a vertical on Delta Airlines. Okay, calculate my probability first. Okay, so 61.26. Oh, okay, so it's not gonna be possible because statistics is suggesting that from now until that date, price may reach 61 something. Okay, so 61 something, it's around here, and therefore I would need to be leaning against 62.23. Okay, so if I look at 62.23, 62.5 only pays 16 cents, so that's not going to be good. If I look at the next expiration date, we got no liquidity there with the 63, 30 to 7. If I look at the next expiration date, 63 got no liquidity, 17 to 62. So basically, we're going to be talking about March, which is the monthly expiration and should have liquidity. So if I look at 62.5, I do have liquidity now, 44 to 46. That's fine. Okay, but now my problem is probably statistics don't work now. This is going to be March 20. Okay, March 20, and this suggests it's going to be 62 and a half, sorry, 65 and 62 and a half. Okay, and stats suggest that this market will be running up all the way to 63.76, and I will be selling the 62.5. So it's not going to work. And if I look at something higher, well, now look at the lack of liquidity again. If I go for 65, which is the next strike available above 62 and a half. So again, no, it's not working. Okay, not giving us the setup we want. Okay, and we have talked about this many times in the past. Okay, the job of a trader is to say no more often than yet. And it's happening today. Yesterday we had a fun day in the short-term session, but today it's being a little more challenging to find setups where we got yeses instead of nos. Okay, so I'm going to stop here with Delta Airlines. There are a few questions there as well, so I'm going to check your questions. Before we conclude as well, remember I wanted to look at GILD, okay? So I want to look at that one too. But let me take a look at your questions first. So, so you had to open the door for UPS and you missed some of it before. Got it. So it's funny that you said that, Dirk, because earlier I was looking at the chart of UPS, okay? So maybe there is a connection there. What a bad joke. GWAC, my UFO views on TradingView are very different from TradeStation. Do I need to change the setting on the chart to load more or less data. Yeah, with TradingView, you cannot change the data to be loaded. Okay, you cannot change the data to be loaded because basically with TradingView, what happens is that if you have a basic membership, I think they load for you, I don't remember by heart, but X amount of data. Where if you have the pro membership, so then the more you scroll, okay, the more you scroll, the more data keeps being loaded. You see, the more data keeps being loaded, and there is a limit as well. I think it's 50,000 candles per chart or something like that, depending on the markets, as long as there is enough history. But you cannot like specify like in TradeStation where you come in here and you say, hey, I want 1,500 candles. Okay, that you cannot do with TradingView. That's one thing to keep in mind. And the other thing to keep in mind, if you have difference on the screen, is the settings. Okay, so I am using in here 0.618. Okay, 0.618, and with TradingView, the settings I'm using right now, you can see here on the top, it's a little small. Let me zoom in for you. Okay, it's 0.5, which is not my normal setting. Okay, this is not my normal setting. It's actually not my workspace. Okay, normally when I use TradingView, you probably are familiar. You have seen me utilize this type of workspace. Okay, with multiple charts and stuff. And then when I do that, then the settings for my UFOs, okay, is 0.618, like in TradeStation. Okay, but in that case, this is just a chart I loaded, to do something, and really it doesn't even matter that if I had AutoUFO or not. I just loaded this to check the earnings. Is that making sense? So the reason why we had different settings, it's very likely the reason why GWAC, we had different UFOs if you were to compare my chart and yours. Okay, and I should have thought about it to not to confuse you guys, because you're probably used to me using 0.618. Okay, so sorry for that one, but that's the reason. Okay, good. Okay, so GILD. Okay, we said earlier that it may be a tough one, but it's going to be worth it to check. Okay, so what do we have? We have 64.5 is the current price for GILD. If we were to look at one standard deviation from now until January 31st, this is bringing the price up to 66.14. Okay, 66.14.15, which is still, okay, it's still the same above 0.9. Okay, so now the good news, though, and the reason why I'm going to mention good news is for you to monitor this, is that if you look at the distance from here to here, okay, the distance from here to here, if you project this to the downside, so basically we are dealing with that lower UFO at 62.80. Okay, so given where price is right now, you may be able to do a trade with 66 and 62 later on. Let me see stats. 62.88, okay, 62.88, and that is 62.78. Okay, so the range would work. I mean, right now the range is not working by like 10 cents above, right? So watch it, because if this current price 64.51, if this market just drops a little bit, and it should, because there is a UFO, okay, if it drops just a little bit, okay, you would be able to go ahead and plan a trade on that market, at least based on stats. Then you need to look at the other rules to see that you do get premium enough that justify the risk. Okay, but from a statistical point of view, on the chart, it is looking like it could be valid. Okay, so keep that in mind. I cannot plan the trade, but those are my instructions for you guys to check that maybe a couple of hours later or something, and you may have a trade set up. Okay, directional short, same target, directional long, one stock only. Okay, so yeah, so that's what we got today. I'm gonna take a look at the other stocks in the list here. British Petroleum. Let's see what we got. So BP. Okay, so earnings not showing. Earnings happening here on 4th of February. So 4th of February actually allow us to do a trade using January 31st, okay? But let's face it, this is a very low price stock. If I sell the 38.5, I would say it's no way I'm going to get paid enough. I really need the earnings day to be further out. So let's do this. Instead of looking at the charts, let's look at the earning dates. Okay, I'm going to type, I'll skip HSBC because options are not really liquid. What about eBay? eBay has earnings on the 29th. That's tomorrow. Doesn't work. SLB earning on the 17th. So I guess that already happened. Let me confirm. SLB earning on the 17th already happened. Okay, so that's good. So I guess that what's happening with SLB is that stock is being crushed, and therefore the value for those options is just really, really increasing. And in that sense, we may have a setup. Okay. So let's check. Just waiting for this to load. General Motors and American Airlines. Okay, so let's look at the earnings in the meantime. We have a few minutes left for the session to be concluded, so I'll work in parallel here. So General Motors is February 5, so that's good. And American Airlines is January 23, so that may mean it already happened. So it may be another one of those stocks that is really crashing hard. So yeah, January 23. Okay, so I think that probably American Airlines and SLB are our easier bets. Okay, nice on-field orders pushing price, but unfortunately, we don't have the 48% we need. We are very close, but not there. But our pre and post market, we don't have it either. Okay, so American Airlines is looking like it's gonna be our only opportunity here to do a bear call spread, credit spread using calls. And I'm counting on American Airlines to give us a setup. Would be greatly appreciated. After all the analysis that we've done today, we deserve to find a trade, isn't it? Okay, so we got 50%. That would have us use the 29 calls. Okay, I'm using 2 UFOs above. And if I move to regular session, 54% even better, and that would have us also use the 29. So the question is, how much we get paid for the 29 on American Airlines? And again, it's a very low price point stock, so I'm concerned we're not going to get paid enough. Okay, so 29 is paying 29. Okay, it's not 35, so that's not good. So if I go for 28th of February, I'm losing liquidity. If I go for the monthly March 20, 29 is paying 58. Okay, but in any case, I'm just doing the math quickly, and this happens most of the times, by the way, when you go for longer term expiration dates. Okay, if you do the math, the difference between 58 and 38, that is 20 cents. And if you calculate the difference between 29 and 30, that is $1. And 15% of $1 is 15 cents, but that is 20 cents. In other words, this setup does seem to work, okay? As long as probability suggests that using the 29 is fine. So let's take a look. I'm gonna analyze and sell a vertical on American Airlines. I'm using March 20. I will now go ahead and activate plus 1 standard deviation, and here we go. That suggests 30.6. So let's take a look at 30.6. Okay, 30.6 will be that UFO. I mean, we do have a UFO to defend ourselves. Nice one. It will be 4 UFOs in our favor. That's cool. But how much we get paid for the 30.5? Okay, it will be a 31 actually, and that is 24 cents, which does not meet the rule. Let me take a look one more time. Yeah, 30.75. It's closer to 31. That what it is to 30. Okay, so I was for a minute I didn't remember it was 75. So I'm like, okay, if 75, if that number is closer to 30, then I would be open to sell the 30. Which, as you can see, the reason why I was thinking is because it pays 38, which is more than 35. But 30.75, which is the extreme of the UFO, it's certainly closer to 31, and therefore I am not allowed to use the 30, and therefore I would only get paid 24, which is less than what our rules suggest. And therefore, we're gonna give American Airline a no go when putting this trade in place. Okay, so yeah, many charts today, isn't it? Many charts. Okay, lots of kind of practice repetition, going over setups. Okay, but yeah, not much. I guess that the VIX has been dropping today. Yeah, 6% down. Okay, it went from almost 19 to 17. Okay, so I mean it's still much higher than before, but also the fact that stocks are moving aggressively is creating a little bit of a conflict. Okay, I'm pretty positive yesterday was an easy day to find those trades, but today with a little bit of bounce of the market, okay, the S&P, how much is the market bouncing now? 0.5%, 0.58. So with the bounce today, all those option prices are shrinking while the market still look in that directional move to the downside. You can see we got our second dot on the climate. Okay, so 2 out of 5. Okay, and therefore today it made it difficult for us to find the setups we need. Having said that, depending on your availability for time, always worth it to rerun the scans. Let's say a couple of hours from now, when people in New York are gonna have lunch, 12 p.m. New York time, something like that, it could be a good time to rerun the scans and replan for directional trades and non-directional as well for the afternoon session. New symbols may show up, and if they do, remember the beauty of TradeStation is that if you run the scan again and you got new symbols that show up, let me show you that with, for example, futures. Okay, so what happens if you run the symbol, the scanner, and new symbols show up? They show in blue color. So the ones with the black color you already checked before, no need to check. But the ones with the blue color are new opportunities. Okay, so you can always go ahead and rerun the scans later on. And if new blue color symbols show up, then you haven't checked that today yet, and you can go ahead and check the chart and see if you have an opportunity. Okay. Very good. So, Dirk, Sunday we're going to be talking about a little bit of everything. I want to go over the process. I want to talk about trade management. We've got many questions recently when it comes to trade management. It makes me feel that maybe we should do a session to talk about trade management. And also, I want to run some Q&A. Many people, many of you have been trading the whole month of January. If you recall, the last time we did sharpening was December last year, isn't it? And we did special sessions talking about your plans for 2020 and so on. And many of you started trading live. So, I plan to use the Sunday session for you guys to provide feedback, to share questions you may have, and talk about, how is it going in that first month of the year, where you guys have been exposed to the market either more intensively or with rare capital, and, touch on basically every single angle and a little bit of an emphasis on trade management, but really touch on every single angle. Okay, so and by the way, you read my mind there. If you have any questions that you would like me to address, or any comment or any request about something that you would like me to address, even though it may not be a question, go ahead and shoot an email to me, and I'm more than happy to talk about it and address it on Sunday. And remember, if that was to be something like very personal, like for example, I've been trading the first month of the year, and look, I'm not proud of my results. I've got in trouble. I broke my rules. I lost 3 trades in a row. I got in revenge mode. Whatever. So good or bad experiences. If you want me to keep them anonymous, I understand that and I can do that. But at the same time, I could certainly still address them in the session without mentioning your names if you feel more comfortable. But at least you get some coaching about it, instead of you got in trouble and you kind of know what you did wrong, but let's have someone with more experience. In this case, I'm making myself available for you guys. Let's have someone with more experience to review it for you, because that should help you to understand what the reasons could have been, and help you do a better job in the month of February. Okay, so teamwork, I always say it, and really that's what counts. Okay, and that's what really makes a difference. So I'll be there for you on Sunday, and I'm counting on seeing you guys, and anything you need that day or prior to that day, you can also shoot an email. Anyway, That's it for today, my friends. I'm gonna say bye. See you very soon on Sunday, as we just said. And in the meantime, keep up with the good work and follow the rules. Bye bye, everyone. Take care.